welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 27th of November 2023 and here are the questions we will be answering today. Is the old pension scheme making a comeback? Have the stars aligned for Tesla's India entry? How will markets play out in this holiday truncated week? And who are the Houthis? Discontinued in 2004, the clamour for the restoration of the old pension scheme has been growing, and approaching elections have made it louder. With some opposition ruled states implementing it, ruling BJP, it seems, is also in a quandary. Senior BJP leader Amit Shah promised last week that the party will deliberate on restoring it once the panel formed to look into its merits submits its report. Kasturi Akhil finds out if the old pension scheme is on its way of making a comeback.
Rajasthan, Chhattisgarh, Jharkhand, Punjab and Himachal Pradesh. These are the 5 states which have gone back to the old pension scheme or OPS that was scrapped in 2004. And the list of opposition-ruled states which are planning to switch to this scheme is also getting longer. After Karnataka, where it has come to power, Congress has now promised OPS in Telangana. And with general elections around the corner, BJP too is weighing its options. Senior party leader Amit Shah recently said that the government will deliberate on restoring OPS once a panel formed to look into it submits its report. Thousands of employees from several states and central ministries like Railways, Defence and EPFO, under the umbrella of Government Employees National Confederation or GENC, held a rally in Delhi last week in favour of the old pension scheme. GNEC is the industrial unit of the RSS-backed Bharatiya Mazdoor Sangh. Their delegation also met Finance Minister Nirmala Sitharaman and expressed concern about the new pension scheme. The OPS guaranteed half the last basic salary drawn as pension, without any contribution required from the employees themselves. But this system had stretched state finances. NPS, on the other hand, is a participatory scheme. In NPS, the employee's monthly contribution is equivalent to 10% of their salary and the government's contribution rate is 14%. Experts suggest that even though the repercussions of state going back to OPS will be felt some years later, the financial burden going forward will be huge.
NPS for those who joined government jobs since January 1, 2004. So the burden currently seems to be more than reverting to old pension system. But going forward, when the employees who have joined since January 1, 2004 start retiring, say from 2034, according to one study authored by pension expert Gautam Bhardwaj and former SEBI chairman Dave, implicit debt liability of pensions to central government employees as well as state government employees would amount to around 65% of India's GDP in 2004-05. Implicit pension debt liability refers to present value of future pension promises.
An article published by the Reserve Bank of India in September called out states that have been opting for OPS just because it is politically favourable and called it a major step backwards in managing fiscal deficit. The article highlighted that the cumulative fiscal burden under the OPS could be as high as 4.5 times that of the new pension scheme. If they switch to OPS, states will only be saving 0.1% of GDP in the yearly pension outgo till 2040, post which they may have to incur an additional increase in pension expenditure by 0.5% of yearly GDP. Therefore, it would only mount their fiscal stress to unsustainable levels in the medium to long term, the article warned.
From the point of view of the state, we have seen that pension bills have been building, and this will only be something which will increase because people keep retiring every year. And in case we go back to the old pension scheme, then the burden will keep increasing. And to that extent, there will be constraints on the government as to how much it can spend on other items. So I think that is the basic thing, because we have the FRBM rules in place which say that your fiscal deficit cannot be more than 3.5%, 3.75, 4%, whatever has been decided. And at some point of time, we'll be going back to the 3% mark. Now, if states are going to spend more on pensions by going back to the old pension scheme, then there would necessarily be a problem in terms of availability of resources for spending on other heads, like maybe economic or social development. So that's why I think states finally, in a practical sense, will be treading the middle path, and they will actually go a bit slow when they actually come to power.
Andhra Pradesh has found a way to roll out a hybrid of the old and new pension schemes that offers the best of both worlds. The state passed the Guaranteed Pension Scheme, which guarantees government employees 50% of their last drawn salary on a monthly basis, along with dearness allowance relief. The government herein will make a matching contribution to the employee's NPS account, and any shortfall in the pension amount will be borne by the state government. The committee set up by the Finance Ministry earlier this year that was supposed to review the NPS and come up with a solution is yet to submit its findings. Experts suggest that maybe a complete reversal to the OPS may not be practically feasible. Rationalizing the two schemes and drawing out a hybrid system would be a more logical and sustainable approach for the Indian economy.
This issue of the old pension scheme is indeed keeping the government in a bind. It has to choose between fiscal prudence and populism. But it seems the government has finally made its mind on another tricky subject. It has reportedly given a green signal to Tesla. The approval process to welcome Elon Musk's company to India by next year is being expedited. So have the stars aligned for Tesla's India entry? Ayush Mishra dials experts to find out.
He really cares about India because he's pushing us to make significant investments. In a nutshell, it was a fantastic meeting with the Prime Minister.
A beaming Elon Musk had in June this year signaled some sort of breakthrough after talks with Prime Minister Narendra Modi during his 4-day US visit. The ball started rolling after that, but it is still in the Indian government's court. According to reports, Tesla wants to invest up to $2 billion to set up a factory in India. But there is a condition. The US automaker wants India to cut import duty on its vehicles to 15% for the first 2 years of operations. Currently, India imposes a 100% import duty on fully imported cars, with cost, insurance and freight value more than $40,000, and 70% on those costing less than the amount. In August this year, it was reported that the government was working on a new EV policy to cut import taxes to 15% from the current 100% on cars which cost more than $40,000, and 70% for the rest. But it was in exchange for a commitment to local manufacturing. According to a national daily, Tesla is willing to invest up to $500 million if the government approves the reduced duty for 12,000 vehicles, and up to $2 billion if the concession is for 30,000 vehicles. Sources close to the Indian government suggest that the revised agreement may pave the way for Tesla vehicles to be available in the Indian market by the early next year. Additionally, the US firm is considering potentially boosting the procurement of auto parts from India to as high as $15 billion.
Recent indications and government discussions with Tesla and Minister Goyal's visit to their California office suggest that the government is very keen to get Tesla to manufacture in India. There are also a lot of industry reports that suggest that the government is seriously considering most electric vehicle manufacturers to consider setting up manufacturing capabilities and facilities in India?
The Indian government is pretty proactive, and I think they are really exploring all the possibilities, in terms of bringing the world number EV company, into India. And we have been seeing, that obviously the deal which government may be signing may not be for Tesla. It may be for the entire automotive players in India or across the globe. But I am sure whatever it would be, the government, it would be a perfect, step for building, the EV ecosystem in India.
Sources suggest that Tesla's most economical model, priced at 25,000 euros or over 20 lakh rupees, will primarily be a two-door vehicle set for its debut in Germany. Following the launch in Germany, the same electric car is expected to be introduced in India, making Tesla's entry into the Indian market. This could be a game changer in the Indian market, especially if built locally. According to one analysis, well-off Indians are mostly going for cars in the 20 to 25 lakh rupees range, with the segment clocking a compound annual growth rate of more than 80% over 2019-2022. Even if Tesla overshoots this range by 4 to 5 lakh rupees, experts say its brand value and mystique would see it through.
If you look at Volvo, Mercedes, BMW, and other such high-end luxury vehicles, the percentage of electric vehicles as a total percentage of their sales, right, is significantly higher than other classes of vehicles. So there seems to be a consumer preference in that price point and that segment to go for electric vehicles. Also, in other segments, the electric vehicle sales are increasing dramatically year on year, and therefore there's a consumer preference for electric vehicles. And if there are regulatory changes going forward, like happened when there was a forced conversion to CNG, then it might accelerate the penetration of electric vehicles going forward.
Charging infra is another factor that Tesla will have to keep in mind. According to data from OMI Foundation's EV dashboard, India has 10,185 charging stations comprising 17,094 charging points. Of these, 8,168 are fast chargers, with power outputs ranging from 15 kilowatt to 500 kilowatt. The remaining chargers offer slow or moderate charging, requiring more than 6 hours to charge a vehicle. The absence of standardization is a matter of concern. The elevated expenses associated with fast charger installation, coupled with the uncertainties regarding standards, pose challenges for charging point operators. This situation may present a hurdle for Tesla in India. So what will be the future of Tesla in India?
Tesla may be a new beginning for India's EV ecosystem. And undoubtedly, they may work from entire supply chain, right from lithium extraction to building the vehicles, make in India, and also export from India. So I think, and then parallelly, I think they are one of those companies who can really make India greener. They are one of those companies, who can really make, who can really address our environmental challenges. And primarily, India mobility more sustainable. So that's from the EV ecosystem, and from the consumer perspective, I think consumer can really have the flavor, in terms of technology, what Tesla is offering across the globe. So I think it is going to be a win-win situation, both for Tesla as well as for India. And I would like to say that, obviously Tesla needs India to reach really volumes, because if they really want to be a big player, then they obviously need a market like India, which is the third largest market in the world today. And obviously India also needs Tesla, because it's not like that we don't have Indian players, but it's always good, if we get our supplier ecosystem developed, through players like this.
Tesla's potential entry into the Indian market, with negotiations for both import and local production, may put the EV transition on a fast lane. Tesla may get a big market in India, but it will face a few challenges too. Charging infrastructure standardization is one of them. Right now, the industry is waiting for the government's next move.
Indeed, Tesla needs India and the country needs Tesla. Moving on, after rallying for 4 straight weeks, the Sensex and Nifty are within a striking distance of their record highs. A host of domestic factors, including the Q3 GDP data, could sway the market in the holiday-shortened week. So what should be your trading strategy? Rex Cano speaks to market experts to find out more.
The winning streak of equity markets entered its 4th week last week. Easing US Treasury yields and the hopes of a sooner-than-expected reversal in rate hike cycle gave bulls a shot in the arm. The S&P BSE Sensex swung in the range of 700-odd points through the week and eventually ended with a modest gain of 175 points at 65,970. The NSE Nifty 50, on the other hand, climbed 63 points during the period to end at 19,795. In the broader market, the BSE Mid-Cap Index gained 0.7% and the Small Cap Index added 0.5%. Among individual stocks, the week clearly belonged to Honasa Consumer. The stock dazzled at the bourses with a 43% gain after it clocked in a 93% year-on-year growth in its net profit to 29.4 crore rupees for the September quarter of fiscal 2024. According to analysts at Jefferies, Honasa is expected to report industry-leading growth at 27% over the next 3 years. The brokerage firm has set a price target of Rs 520 per share for the stock. With this week's rally, the Nifty 50 is up over 9% thus far in 2023, with market experts expecting another 10 to 14% rally in the index in the calendar year 2024. That said, in the immediate future, the Nifty may test the 20,000 mark this week.
For near term, index at current scenario is trading between 19,700 to 19,800. Best trading opportunity for traders would be to buy the index with a target of around 20,100. Any day if the index violates 20,200, then certainly we are heading for 20,500 to 21,200. Whereas if it doesn't violate this time, then again we will slowly and gradually drift down, where the stop loss for near-term bullish positions should be placed around 19,400 to 19,500 range.
Fundamentally, Q3 GDP data, October infrastructure print, and the monthly futures and options expiry will swing the markets this week. Besides, the listing of Tata Technologies and the impending results of the 5 state assembly elections on December 3 would also play on investors' minds. Markets are shut today on account of Guru Purnima.
He's making plans for an early retirement. Business Standard.
But the market experts are also keeping a close eye on the ongoing Israel-Hamas war. Recently, Houthis rebels hijacked an Israeli ship in the Red Sea, a move which stoked fear of escalation of the clash. But who are the Houthis? Ayush Mishra explains.
Yemen has been turned into a ground for a proxy war between Iran and its rival Saudi Arabia for decades now. And the maximum price is being paid by the people of the country, as thousands have been killed and its economy has been run into the ground. While the fighting between the Iran-aligned Houthis and Saudi-backed Yemen government was stopped a few months ago after a UN intervention, fear of an eruption still looms large. Yemen consists of 2 Islamic religious groups. 65% are Sunnis and around 35% Zaydis Shias. Most of these Zaydi Shias are Houthis, which is a subsect of Shias. Al-Hadi Ilayal Haq Yahya had established Zaydi rule in Yemen in the 9th century, and a Zaydi monarchy survived in North Yemen for more than 1,000 years. But the monarchy came to an end in 1962. For decades now, the Zaydis have been engaged in a struggle for control of Yemen. It all started when Saudi Arabia started sending its clerics and newly found money to Yemen in its bids to shift Houthis into the fold of its own ideology, which is the Wahhabi sect of Islam. It united the Houthis and an armed struggle ensued. The Houthis movement started in northern Yemen with an aim to protect and revive Zaydi religious and cultural traditions. The group has now established itself as a formidable force in the country's complex political landscape. They control most of North Yemen, including the capital Sana'a. They have consistently demanded greater representation and autonomy for the Zaydi Shia community within the Yemeni state. The Houthi uprising gained momentum in the aftermath of the 2011 Arab Spring, which led to the resignation of then-President Ali Abdullah Saleh. The Houthis expanded their territorial control by capturing the capital city Sana'a in 2014. This marked a turning point in the conflict, leading to increased regional and international attention. It also prompted Saudi Arabia to stitch a Western-backed alliance and prop up a government there in 2015. The aim was to check Iran's growing influence in the country.
By the nation's trusted bank, SBI, the banker to every Indian.
Experts also claim that Saudi Arabia is eager to exit from Yemen's civil war. Well, that's all for today. For more news, views and analysis, please log into business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.